we've lost in Northwest Territory Mint a couple of years ago. Then we lost Republic Mint also a couple of years ago. These are two big U.S. based mints. I think Republic, I think, was the largest mint in the United States, and they're gone. And because they expanded too quickly, and then the market turned on them, and they couldn't finance the business. And so these mints, if we could solve that issue, we could double or triple our sales, I think, quite easily. But we have metal sitting at the mints right now, waiting for delivery, waiting for production, and we have to wait months and months to get our product, in order to resell it.
Welcome back to Soar Financially, everybody. Thank you so much for joining us for another exciting discussion here on our channel, where we discuss the macro to understand the micro better. And today we're combining both because we have the CEO and president of First Majestic Silver joining us. So we'll, of course, talk about the micro, meaning the company, but we'll also talk about the macro. What is happening in the silver market? Where are things headed? Personal gut feeling, I just shared that with Keith as well. It feels like silver's, it's gotten a little more quiet on the silver front. Gold is stealing the limelight a little bit lately based on all the central bank buying and, the geopolitics that we're seeing in the market. And silver's been, had to move over just a little bit. So I'm curious what my guest here, Keith, has to say about it in a second. Before I switch over, though, hit that subscribe button. Right there. It says subscribe on it. It's that square box. I know 80 to 85% of you watching are not subscribed. Let's change that so we can bring guests like Keith back on more frequently and invite other great guests of caliber on this program as well. It helps us tremendously. All right. Enough of that. Let me introduce Keith. Welcome back on the channel. It's good to see you again.
Yeah, great seeing you as well, Kai. And it's nice having this opportunity to chat.
Absolutely. Yeah, looking forward to it. It's quite opportune today as well because we're recording this August 3rd. You just put out your quarterly financials this morning. So it gives me a lot, of course, to ask and lots of topics to discuss here. But why don't you give us the cliff notes and the highlights of the quarterlies and how did last quarter go?
Well, from my perspective, I look at the Treasury. I think that's the most telling story of the health of any business. And we had a challenging third, fourth quarter last year with Jerritt Canyon, the investment and the cash burn that was going into Jerritt Canyon, in particular Q4 and Q1 of this year, and we were having a bit of a challenged treasury, and to end Q2 off with around $300 million in the bank. That was a pretty relieving sign for me. So there was good cash coming into the business in Q2, and I look forward to a strong Q3 and Q4. We had two mines, the Santa Elena mine and the San Dimas mine, carrying the weight of the business. Lincoln Tata's, the smaller mine of the three, and it just was this basically steady state. We had a little bit of hangover from Jerritt Canyon. There was some one-time costs that did affect our earnings in the quarter, but those costs won't be hitting us in Q3 or Q4. So we should see improvements, I think, even over what we saw in Q2.
What were the all-in sustaining costs per silver equivalent ounce produced?
You have to ask me that question.
Here, I got the press release in front of me here.
It's in the. You should have told me. I would have printed the news release out, had it in front of me as my notes.
Here, 2152. 2152.
Well, that includes Jerritt Canyon, though.
Exactly. So just company wide, right?
Yeah. If you took out Jerritt Canyon, I think it's closer to 15.
Yeah. No, it's what does it say? Without the Mexican operations, 1344, which is a really respectable result. So lots of cash flow coming in, of course, out of Mexico. They're looking really, really good. But you had some cost pressures in Mexico as well that you mentioned in the press release, is the stronger peso. Can you tell us a bit more, elaborate on that? Like, how are you fighting the stronger peso? What are you doing to contain cost?
Well, we've unfortunately, what happens, you start laying off people, and our workforce, we're around 4,300 people right now. And that compares to, Jerritt Canyon, of course, we laid off about 600 people at Jerritt Canyon. So that would, call it 5,000 people at the beginning of this year. But if you go back even another 6 months prior to that, we were in the 5,600 range. So, being down about 4,300, that's quite a significant amount of layoffs. And, we can continue to look at the business and try to get costs reduced. We actually just signed a cyanide contract that had a nice savings in it. We are using LNG at two of our mines, which are substantially helping us as well. So there are some areas of improvement, but the peso is definitely an annoyance. When I put the business together, 20 years ago, we had 11 to 1 peso, and then just a year ago we had 21 to 1, which was pretty exciting. And I think a lot of the Mexicans, players in the mining sector, really benefited from the weak peso. But now, just yesterday, well, we got down about 16.5 to 1, I think last week. And just yesterday, I looked at it, it was a little bit over 17. So it has started to weaken again. Hopefully that trend continues. They are going into election season. Oil prices have gone up a little bit over the last month, which has helped the peso. I'm not sure, what oil prices are going to do over the next 6 months, but of course, being the peso, it is heavily influenced by oil prices. Also, with the disinvestment that's happening in China, with some of the pressures on industry to open up North American operations, some of these, corporations, in the auto sector or elsewhere, high technology sector, are opening up facilities, or at least talking about opening up facilities in Mexico, which is being supportive to the peso as well. But it's Mexico's Mexico, and it is challenging down there. I think that peso's overreacted. I think it's stronger than it should be. I'm looking for it to weaken over the next couple of quarters. At least I'm crossing my fingers that that will happen, because it does affect us a lot. About 80% of our costs are in Mexican pesos.
Do you have any bigger capex coming up in Mexico while you hope that? Because that would have a big impact, of course.
Fortunately not. We had the big, I guess, exploration, of course, that's always there. And mine development, we've seen inflation in mine development. If you look into our financials a little more deeply and you start comparing cost per meter, over the last couple of years, it's actually quite shocking how much it's gone up. It's like almost doubled in the last 2 years, and that's partly lack of manpower, but it's also energy costs, and it's also supply chain issues. I'm hoping that's going to reverse. We actually have a task force that we've just put together in the last 30 days to look at mine contractor costs, because we're trying to maybe bring some of that business in-house to try to lower some of these costs. Or we're looking at lead times of equipment and a number of different things we're looking at to try to mitigate some of these increases that we're experiencing.
Remind me to ask you about supply chain later on. Curious how that is affecting you, but I want to stay a topic. Like, quickly get an update on guidance for the rest of the year. How is that looking? You give a bit of a cost guidance here in the press release. How is that looking on the operation side down in Mexico?
Well, we wouldn't. The news just came out today, so obviously we're confident in the current guidance that's currently on the street. With Jerritt Canyon being taken out of the guidance, which is, of course, a different topic of discussion. But the Mexican operations are doing quite well. Ermitaño is going into quite a rich area. So the grades at Ermitaño, which is part of the Santa Elena complex, is looking really good. San Dimas has done well over the last month. He had a particularly good month in July. And I think that's going to continue with lower dilution, which we're very much focused on, where we've had some really good discussions with the union of late. And, there's some changes that have been occurring there, which is helping the cost structure, as well as, bonuses and productivity, on a per man shift basis and so on. So, we're on top of all these issues. It's mining is a complicated business, and there's always something going on every day that we have to monitor. But no, we think Q3 and Q4 are going to be good quarters for us.
Fantastic. Okay, all right. Let's look forward a little bit. Or actually, sorry, I'd need to ask first. Do you hold any silver in inventory? Because I know you've been holding back silver in the past, waiting for a different price environment. You still have any in inventory?
Other than the metal that's in transport, there's about 400,000 ounces of silver currently sitting on the floors of a variety of mints and in transport from the mines, but which of course is in our inventory, but it's technically not being held back. It's just in transport.
Okay, makes sense. Pretty much leads me to the question about silver price. I'm wondering if it's too early shifting, because I want to talk a bullion story real quick as well before we talk silver, because you run your own bullion store, and it's an interesting topic because I think, or I would use it to gauge trends, right? Interest in in silver itself, and you sold $2.4 million dollars worth of silver last quarter. It's quite significant. Do you want to give us an update on that, and what kind of trends do you see emerging there?
It's a really exciting part of our business. It's something we've been doing for, well, over a decade now, I think 13 or 14 years. And we did it, just basically as at the request of our investors, wanting to have, physical products, and it turned into this, profit center, within the business. We don't make a huge amount of money, but it's nice to, have a small profit center that is satisfying a need in the marketplace. But it's frustrating because the bottleneck is the mints. In the United States or North America, the refining capacity is pretty good. There is room for additional metal, to silver and gold I'm referring to get into the refining system and get refined into final, 999 product. But where it stops, and these are commercial bars I'm referring to, but where it stops is the mint. The mints don't expand. They're reluctant to expand. They've been bitten in the butt, in previous cycles where they have expanded, and some of them have gone bankrupt. We've lost in Northwest Territory Mint a couple of years ago. Then we lost Republic Mint also a couple of years ago. These are two big U.S. based mints. I think Republic, I think, was the largest mint in the United States, and they're gone. And because they expanded too quickly, and then the market turned on them, and they couldn't finance the business. And so these mints, if we could solve that issue, we could double or triple our sales, I think, quite easily. But we have metal sitting at the mints right now, waiting for delivery, waiting for production, and we have to wait months and months to get our product, in order to resell it.
Interesting. Okay, it's like the mint business is an interesting. I know nothing about, because I'm not sure what licensing and permitting and things look like, just to get certified as well look like, and how quickly can you get something like that up and running? Is that like a bank, pretty much? Because getting a bank license is not an easy task either, right?
Mhm.
So I'm curious what that looks like to solve that.
Well, the refining part of the industry is very difficult to permit, because you really need a zero emission refinery in order to get a permit. And having zero emissions, is expensive, and it's a kind of a black box technology, and so they are around for sure, and they've been there for decades, yet you don't really want a refinery in your backyard per se. But a mint is, no impact. It's just, all it's doing is melting refined metal from a refinery and creating a retail product. So there's really very simple permitting, no environmental footprint at all. So yeah, the minting side is quite easy to solve, but the refining side, as I said, is not.
Interesting. All right. Interesting discussion there. But let's not go down that rabbit hole. It's an interesting one, though.
Well, look for news coming. We have some exciting news in that area to talk about over the next couple of months.
Okay, we'll get you back on for that, because I want to learn more about that as well. I find that quite interesting. I like the shiny stuff, right? So I'm always intrigued by it. But I do have to ask you one last question while we're on the first Majestic topic. We have to talk about Jerritt Canyon for a second. What are the plans moving forward? Because now with Jerritt Canyon offline, you're pretty much 100% pure play silver producer, right? Like that shifted again completely. Like, I know you still produce some gold, obviously, but the ranges have shifted now. So what's the future holding for JC?
Yeah, we've definitely gone back to our roots, but it was disappointing. In hindsight, could we have done things differently? We've learned a lot. When you buy an asset, you have certain expectations, and things don't go exactly as planned. It does shake the business a little bit, and we've made some changes to the business as a result of some of the changes that we had to make. But we were hit by a variety of different issues with that operation. We just couldn't get the throughput into the mill, and that's really what drove the decision for me to end up shutting it down. our economic model required 3,000 tons per day to go through that mill to make it profitable, and we were struggling to get over 2,000 tons a day. And it was all kinds of reasons why I could one day have a beer with you and explain more than versus on this type of medium. But and then we were hit by one of the most unusual winters. So we're already struggling, and then we got hit by this crazy winter that affected the entire west coast of North America, and we had minus 30 degrees Fahrenheit in northern Nevada for weeks on weeks and weeks, and even into February, it was still minus 20. And it just continually snowed, and the mill could not handle the cold, and we were struggling to even turn the mill on at certain times throughout December and January. And of course, then we're producing gold at $3,000 an ounce, which is obviously not acceptable. And we're burning through quite a lot of cash as well, which is not good for the business. So we had, our big mines in Mexico basically supporting Jerritt, which, you can do for a while, but there's a limit for everything. And so anyways, going forward, we're over the next 2 years, we're not expecting to see Jerritt Canyon turned on again until at least 2025. Over the next 2 years, we're going to improve that mill so that doesn't, this type of thing doesn't happen again. So it will be winterized. But our geologists have some pretty interesting theories about, where the elephant is. This is a big property. It's a 40,000 hectare land package, and a lot of it's under cap, and it's not been drilled previously. And there's some viewpoints among our geological team that there's an elephant under these caps. And so we're permitting right now. We expect to have permits in place by spring of 2024. We're budgeting right now for 2024, and we're going to throw some money at this theory among our team. And if they get proven right, it'll be quite interesting. It could change this asset dramatically.
Yeah, fantastic. All right. I think that's enough on Jerritt Canyon. I'm really looking forward to some of the drill results. Interesting, though, that you're mentioning you throwing money at exploration, because I know that's not where you come from. I know it's not your forte and not something you necessarily like to do. You mentioned that in the previous conversations. So that's let's see where this goes. It's a controversial asset, and it has been controversial, ever since you acquired it. So I'm curious to see it work, right? Because you have the autoclave there as well that you could use to your advantage to a degree. Fantastic. All right,
and we were getting some ore from local miners as well, and that did help out a little bit last year. And in the future, it's likely going to continue. We're still in discussions with a couple relatively large groups in that part of the state, and possibly there's an opportunity there to turn them when the mill gets turned back on to supplement it with some local feed.
Interesting. Yeah, I'm curious because Barrick owned Midas and where they call Perpetua now, just for the sulfide feed as well. I'm curious how this is all playing out with the autoclave situation. I'm going to be a terrible DJ now and switch songs quickly and really abruptly, because we need to talk silver. Right, we need to talk about the silver price and just the state of the silver market right now. I'm going to get crucified for my intro for sure, because I would say negative on silver here, but just something I observed just the last few weeks here as well. Like, silver has been pushed out of the limelight a little bit by gold based on all the central bank purchases, and just trickling along. Like, the price action was, let's call it, unexciting. It was just following gold more or less. But not much has happened. So I'm really curious what your opinion on silver is right now, and maybe you'll prove me wrong here on my sort of just gut feeling.
Well, looking at the numbers, which quite honestly, I'm not a big fan of the numbers because I think they're all made up. But we know what production is, and production's basically flatlined. For the last 10 years, it's fluctuated between COVID year 2020, about 780 million to a peak of about 880 million in 2016. Last year, we're about 830 million, I think, from memory. So, call it 800, 850 million ounces of silver that the mining sector has produced, pretty well flatline for the last decade. And that's, I don't see that increasing dramatically. Even if Escobal or comes back online, that's only 20 million ounces. And what asset out there, what mine out there is going to add significant metal I don't know of any big zinc mines or copper mines that are coming online, with any silver. No, even gold mines, the ones that are coming online in Ontario over the next couple of years, they don't have any silver. So I'm curious where the silver is going to come from, and based on the numbers that we know, 1.2 billion ounces of silver was consumed last year. And the estimate is somewhere around 1.4 billion of consumed this year. Those are pretty significant deficits, and where the heck this silver is coming from, I have no clue, because I can't see it anywhere. We've got the big hoards in the ETFs, but outside of that, of course, there's the governments. The Russians probably own some silver, and I remember a famous photograph of Putin holding a bar of gold in one of the vaults somewhere in Russia. And if you look closely at this photograph, on the back wall, there's all these pallets of silver. So this is government owned, silver. They don't tell you how much they own, but who knows? And I'm sure the Chinese or the Indians, they also own silver. So whether they're supplying it to the market, no one knows. I'm quite critical of the Silver Institute, and First Majestic is not a member of the Silver Institute. Because of the fact I think they do an incredibly poor job in selling silver and selling what silver is. Silver is a strategic metal. I don't look at silver as a precious metal. I know it's precious, of course, and I'm not saying it's not precious. I just don't look at it. And when I think of precious, I think of currency. I think of gold as currency, as a granddaddy of currency, and I look at silver as a strategic metal. A metal that we need to do a call like this, whatever it may be, whether it's EVs or solar panels or whatever the case may be, computers, all the electronics, pretty well everything we do on a daily basis requires silver. And with the world wanting to go green and get off, oil and gas, which of course is going to take decades to do, but in order to get there, we need copper and silver. And I ran into Robert Friedland just last week, and I watched his presentation. Of course, he's loves copper, is great presenter on copper, and his one of his mines has some silver in it. I kind of nudged him and walked up to him and said, "Hey, copper's the highway, silver's the glue." And he goes, and he looked at me, and he goes, "I love silver." And I said, "Well, maybe you should talk about it a little bit more," but because we don't have, other than myself and a few other people, we don't really have spokesmen out there. We had Brad Cook, who was the president of the Silver Institute, who was, quite, he was a bull of silver. Unfortunately, he's passed away. And Phil Baker is taking over the presidency of the Silver Institute in July. Actually, I guess now. I think probably
It's August already, yeah.
yeah, it's August. So I guess he's probably now the president of the Silver Institute. And he's a decent spokesman for silver. But the Silver Institute focuses on jewelry, which is like who cares about jewelry? It's not a growing business. It's about 15-20% of the market, and it's been that way forever. The growth is in the electronic side of things, the EVs and so on. And so anyways, I'm super bullish on the metal, but the US government just came out with a list of the top 50 strategic metals. I think it was about 2 or 3 months ago. I'm not sure if you saw it, but silver was not on that list. And I said, "Well, WTF? Like, why would silver not be on that list?" And there was metals on that list that I'd never even heard of. They're in the periodic table, of course, but metals that most people wouldn't even know what they are. So I was so of course the Silver Institute saw that, and it's embarrassing for them that the silver didn't show up on this critical list, because it should be there. And as long as there's not a view, as long as people on the street that continually look at silver as a poor man's gold, I think that silver is going to struggle, and we just need that to change. But we need more people to talk about it, or we're going to have a supply crunch where the Teslas of the world just simply have to stop production because they can't get silver.
Now, how happy are you with the silver price right now? Because it feels like it's caught between the recession fears and the Fed policies, right? So on one hand, it's a smaller, as you said, it's a small brother of gold. Like they usually go hand in hand. So there's a bit of safe haven investments because it's more easily affordable. It's about $24 an ounce instead of 19.30 right now for gold, right? So you can easily buy more of it, and you have some of it at home. It's more fungible. You can use it and things like that. But how happy are you with the price and the price action at the moment?
Well, the price action, it's at least in the mid 20s, and it's a decent number. We do okay at this price. We're not making scads of money, as some of the gold players are. The margins on gold right now are much better than the margins on silver. Yeah, and we're only mining 7 to 1. So, for every 1 ounce of gold the miners are mining, we're only mining 7 ounces of silver, yet we're trading at something like 80 to 1, which makes no sense to me at all. But it just goes back to the fact that silver is a very paper driven price, very affected by paper. The silver paper market trades approximately 1 billion ounces a day. And you think about that for a second, because the mining sector produces 850 million ounces a year, and we're trading a billion a day in paper. So, if you as an investor, you have the money, assuming you want to go and buy 100 million ounces of silver, you might decide to go into the paper market to buy it. And you might not even move the price because some bank just writes you the contract and say, here's your 100 million ounces or dollars, $100 million worth of silver. And it's nonsensical that they're allowed to do that, but they do. And they get short, and then when they know the buying will end at some point, as the Reddit crowd proved to us. And they put a wall in place at $30, and the price, just no matter how much buying came into the market, they just wouldn't allow it to go higher. And then the second the buying stops, they start smashing the market down to get all these investors out of the market and buy all the paper back. And it's almost criminal in a way, but this is the way the market is. And I've been advocating for quite some time that the mining sector has to come up with a different pricing mechanism for the metal, and I'm trying my best by pushing our metal through mints and taking our metal off the banking system, but it's so easy. For the mining sector, it's a simple process. We produce our metal, we pick up the phone, and a trader takes it from us, and it goes into the banking system, and it goes into industry, and the mining company gets paid within 2 or 3 days of that metal leaving the gates of their mine. And it works out well. It puts a smile on everyone's face, but they're not thinking that, hey, there's a whole mechanism behind this that's affecting the price, because these banks know how much metal's coming, and they know how to hedge it, and they know how they could margin it. And when you know what the supply is going to be, you know what your limit is on the paper market, and it's kind of screwed up. So if the miners would actually start pulling some of their metal out of the current system, then all of a sudden the banks wouldn't know if they're going to get the metal or not, and then all of a sudden they wouldn't be taking the same risk that they're taking today, in the paper markets.
Add some uncertainty to it as well. And you're getting a higher price. As you said, you're selling it for over $27 versus, let's say, 24 in the market right now. So
True enough, yeah.
and you got to take, subtract some of the processing cost and the minting cost,
Yeah.
of course,
Oh, yeah.
but
Yeah.
there's still a bit of a margin, a higher margin, possible. Let's combine the macro with the micro for a second, meaning, okay, the overall growth of the silver market plus First Majestic's growth, right? Your silver company, where do you see your growth coming from as well? And let's combine that, because you said there's not a lot of silver coming from any of the other, let's call them polymetallic mines out there. I don't know too many pure play silver explorers, right? So where do you see growth coming from? On the macro side, but also on the micro side, on the First Majestic side.
Well, I can tell you it's a discussion that we have regularly inside, and we just finished 2 days of management meetings in Vancouver, and we had the whole senior team here, and we spent a lot of time talking about that type of thing. And we have non-disclosure agreements in place with a handful, or actually a couple of handfuls of companies out there that we're always monitoring. Looking at drilling results, looking at financial statements, looking at production numbers. So we do a lot just watching what's happening in the marketplace, and it is a very tough market. The silver industry, like, we could load ourselves up, as we proved at Jerritt Canyon. We could go buy a bunch of gold mines, but buying silver mines is a very difficult thing to do, and it goes to that ratio, 7-to-1. And I don't think investors really understand the rarity of silver, and that's what bothers me a lot, or confuses me at the same time. Where the metal's trading. If we had $100 silver, where I think silver should be trading at today, then we would have more investment into the silver sector. And because there are a lot, yourself, Kai, there's lots of metal out there. There's lots of silver out there, but it comes down to economics. At $25 silver, it doesn't pay to get it out of the ground. Because if you've got 50-gram ore body, that's what, $45 we're in value on a ton of ore, but it's going to cost you probably north of 100 to process it, maybe 200 to process, depending on what country it is located around the world. So that means you've got to have metal prices at least 2 to 4 times where the current metal prices are trading, just to bring some of this additional silver online. At current metal prices, we're not going to see growth in the silver sector, and but we're looking long term. We do have our foothold into some juniors, and we monitor the space a lot, and we hope to grow. Our goal is to get up to 50 million ounces by 2030, and we think we can get there, but it's going to take some time. And we're going to, of course, we're having some great drill success at our Santa Elena project, which I should mention. And you've got a couple of pretty interesting ore bodies that are being developed there. So possibly, if we're lucky a little bit, maybe we'll see Santa Elena expand over the next few years.
You mentioned foothold in a few juniors. I'm curious, like, if you're planning on expanding that just to get more access, maybe get a foot in the door, maybe a ROFR, right of first refusal, maybe on an offer as well. Not sure if you can write that into a subscription agreement, of course, but is that something you will be willing on expanding on? Because we discussed briefly, you're not an explorer. You like buying into things.
Mm-hmm. That's my preferred route, and that's what I've done basically throughout my career. Going back 35 years, and of course we drill. We're a mining company. We have to drill, but I'm not a geologist, and I'm more of a finance guy. I'm a deal maker, and I like doing deals, but we do drill, and we do try to replace ounces. Our corporate objective or goal is to replace every ounce we mine on an annual basis, and we generally do that. It's not, we don't do it every single year, but we try to keep that momentum going. But that requires spending money on the drill bit, and but in addition to that, there's juniors around in Mexico and Nevada that we own small pieces of, and we keep in touch with them. We actually have a company coming in today that we've been following for the last 5 years, and so we're always bringing management in. We're always keeping close to them and seeing where their needs are. If they need to raise capital, if they need technical assistance, can we help with metallurgy? Can we throw some whatever help we can? We're there to assist, and if it meets our criteria at some point, we might jump in and end up taking us a bigger toehold into it, or maybe ultimately take it out if it proves out to be big enough for us to bring into development.
The sector definitely needs it as well. If I look at the financing numbers, we need help from the majors and from the bigger producers. Yeah. Definitely. Fantastic. Keith, any last parting words here before we break up? I think we discussed silver, we discussed First Majestic. I think we can put a bow around it, eh?
Yeah, it's we're right in the middle of summer. We've just June is generally the low in the market, as proved again this year. You look at a 30-year chart, and I was just looking at a 30-year chart just yesterday, and every June it's just amazing. And this is a turnaround. July, August, is your turnaround time. If there's juniors that you're looking at taking positions in, now's the time to do it. The entire sector has been, down substantially over the last couple of years. It's completely out of favor. This almost compares, to 2014, 2015. Maybe not be quite as bad because we didn't have gold prices where they are today. But the investment sentiment out there is horrendous. The institutions are not invested in this market at all. They will come back, I think, when gold breaks through $2,000 here in the next couple quarters, and we see silver go north of 25, consistently north of 25, and I think that the institutions will start to come back into this market in probably, I would assume, Q4 or Q1, and that's going to be. I'm looking forward to a pretty solid 2024, 2025 in the resource sector.
Fantastic. All right. And on that note, we're going to end the conversation, Keith. Fantastic.
Great.
Really appreciate your time. Thank you so much for catching us up on First Majestic, but also discussing silver, of course. Fantastic. Everybody else, thank you so much for tuning in. We hope you enjoyed this discussion about First Majestic, the silver market as well. Don't crucify me. I was just sharing my gut instincts here, what I've been witnessing and following here in the markets, and what the other commentators on the program have been talking about. Although we talked a lot about silver this week. Greg Manarino talked about silver being the best asset on the planet right now, for example. So check out that interview. We just published that today on August 3rd. So I'll probably put a card up here so you can. Or actually, this side. It's on this side. It's going to be up here. There's going to be an info card right there. There's a subscribe button right here. Hit that, because I know 80 to 85% of you watching are not subscribed. Let's change that so we can bring Keith and other great commentators back on the channel and expand maybe our scope even as well. Really appreciate it. Thank you so much for your time. We'll be back with more.